Hello, class. Welcome to this chapter 4, handout 1 answer video. So on this one, we had to do some matching with some terms. We talked about with internal controls. And I gave you your first shot here at doing a bank reconciliation. So hopefully, get a chance to get it done. And here's just checking your answers, and that we'll kind of discuss it as we go through it here. Ooh, screen shared. Draw function on here. So we're looking at terms here. What I like to do is I like to read the term, not the actual term, but the definition of the term, and try to match them up that way. Okay. So first, a company policy that prevents accountants from handling cash. Is that a good idea? For accountants, you want to control your books. You don't want them to also have physical control of the stuff. That to me sounds like a segregation of duties. Seven was A. Company policy requires receiving reports to be made for all deliveries by suppliers. Keyword here, receiving reports. Adequate documents and records. Cash deposits are reconciled with the register records at the end of every day. Okay. Seems like a verification process. Go straight across here again, and these checks on recorded amounts. One of our control procedures there. Okay. This includes the accounting systems, all policies and procedures of the business, and the environment in which they operate. And that is kind of everything that deals with internal controls. So it's 5, internal control structure. Every evening, a jewelry store removes all merchandise valued at over $100 from its display, probably takes it back, puts it in its safe. It is safeguarding over assets and records. These policies and procedures that govern the identification, measurement, reporting, and communication of economic information. What is the identification, measurement, recording, and communication of accounting information is what? Accounting, that is the definition of accounting. So those are your accounting controls. In G, every new employee is required to spend 2 days in training courses to learn company policy. That is an effective personnel policy. So there's for your answers for those. I kind of think you might see those laid out. All right, second here, we had a bank reconciliation. All right, so Firebird Company here. First thing I'm gonna do. As much room to write on as I can here. Okay, so that is our bank balance that's listed up top here. What I want to do, make 2 columns. Balance per bank. We might need a few more balance per book. Okay, and I always start with my beginning balance. So my bank beginning balance from the bank, 87,392, which is found right up on top where it says balance February 28th. Okay. My balance for the book, I look where down just a little bit where it says checking account balance per Firebird books, 73,260. So there's my starting point. If I want the bank statement says I have at the end, and then what my books say I have at the end. So for my bank statement, what kind of adjustments do I need to make when it comes to my bank statement? Well, I need to only adjust on stuff the bank would not know about. Two major things that the bank would not know about are deposits in transit, something we recorded on our books, it just has not gotten to the bank yet, or outstanding checks. Checks we have written that have not yet made it to the bank either. Well, I look up here at our information and we have both of those right here. So we can go ahead and adjust our balance for the bank by adding in the deposits in transit first. $47.85. And then from there, we can subtract out the outstanding checks. And the outstanding checks amount were $6,440. And those are the only two adjustments that we need to make to the bank account, because that's the bank, everything else, the interest, the error here. Error was made by us on our books. It wasn't a bank error. Okay, so we need to adjust our books for that. But everything else, the bank had on the statement that the bank already knew about. Those are the only adjustments we made, making our adjusted balance $85,737. So on the balance for books. Okay, so what did we have up here? It says interest earned during February. So if the company earned interest, we have to add that on $875. And we would have not known about that. Do that. They also selected a note in interest of $12,350. So we need to add that in. Okay. If we look at the error, because I'm looking up at the top first, I see the service charge and the NSF check, but those are going to come out of our account. Okay, so I'm putting everything that goes in, everything that makes it go up up first. So we have an interest and a note and plus interest. And the error is actually going to make our cash go down by $18. Okay, so that's what I would look at next to see if it would have made it go up. So I'll go ahead and put that on there. The bank error there. We did not record the full cash amount when we should have. We recorded it at less, so we needed to update it to its correct amount. And here is where you also have the service charge. 100. And the non-sufficient check of 630. And if you do your math out, you get 85,737 as your adjusted balance here. Okay, so it all works out. Okay, it balances out the 85,737. That's the amount we want to put on our balance sheet as our cash account. And we know that us and the bank are on good terms because we can make ourselves balance. The last thing we need to do is we need to set our account straight in order to get this right. Okay, so we need to add cash for the first two entries, and we need to take cash away for the last three adjustments that we made on here. So we're going to need to make some journal entries. Okay, so just making some adjusting journal entries from our bank reconciliation. The first thing is that we had interest. Interest was $875. And that just said interest earned at the top of our page. But the second one down, it had two components to it. It was a note receivable for $12,350 of it was interest. So the first thing that made our cash go up, so our cash going up as a debit, was interest income. I'm going to add those two together, the 875 plus the 350 from number two, you get 1225. Second thing that made our cash go up was the payment of the note receivable. And the amount of that was 12,000. Okay, so I just took that second one, put the interest included with the first one. And you know, if you get really good at accounting, you can make this in one entry, or you just have one cash entry, interest income and note receivable as your credits. But that accounts for the cash that was coming in. For the cash that was going out, first for the air, here we would need to debit our accounts payable because we misrecorded it. We didn't think we had paid it, so we still thought we owed it, but we don't. So we can lower our accounts payable with a debit and lower our cash with a credit. And that was for the $18 for the air. Here we have an expense, a service charge, call it service expense. If you already wrote that, that's fine too. Service charge, and that was the amount of $100. And finally, the non-sufficient fund check of 630 is going to get debited into accounts receivable. Okay, because now we are still owed that amount. We thought we got it, so we took it out, but now we need to put it back in there. Okay, and those are the 5 adjusting entries you would need to make when doing that bank reconciliation. Right, chapter 4 handout video 2 is going to be a short one. There's only 2 quick problems over cash over short and petty cash. Okay, but hopefully this will get you through your bank reconciliation questions. And as always, if you need any further assistance, do not hesitate to reach out to me. Talk to you again soon.